So you get your payslip, you look at that number at the bottom, and you think, okay, that's my take home pay. But have you ever really looked at everything else? It's more than just a number, it's a whole story about your earnings. Today, we're going to unpack every single part of your compensation to figure out what's really taxable here in Malaysia. Which brings us to this big question. What is your salary really worth? You know, the number you saw in your offer letter? That's just the starting point. Your total compensation package is a much, much bigger story, and understanding it is absolutely key to knowing your true financial value. All right, so here's how we're going to do it. First, we'll unpack your income, starting with the cash. Then we'll dive into the perks of the job and talk about housing. After that, we'll pull it all together in the final calculation and wrap up with how to know your real worth. Simple as that. Okay, let's start with the part we all know and love, the actual money that hits your bank account. Now, in the eyes of the tax authorities, this all falls under Section 13(1)(a) of the Income Tax Act. That sounds technical, I know, but it's basically the foundation of everything we're about to build. This first part is pretty straightforward. Your gross salary, any bonuses you get, overtime pay, commissions, that's all taxable. No surprises there. But it also includes things you might not think about, like getting paid out for unused vacation days, or a gratuity payment when you leave a job. The rule of thumb is, if it's a direct cash payment from your boss, it's part of this taxable foundation. But here's where it gets interesting, because not all cash is treated the same. This is all about allowances. Some allowances, like for entertainment or housing, are fully taxed, just like your salary. But others, and this is the important part, for things like travel, parking, meals, or even childcare, are actually tax-free, usually up to a certain limit. So think about it. A 500 ringgit meal allowance is worth way more to you than a 500 ringgit housing allowance, because you get to keep every single cent of it. Okay, so we've got the cash component down. Now let's build on top of that, because your compensation isn't just about money, right? It's also about the perks. And the tax system splits these non-cash benefits into two very different categories. Understanding the difference is super important. First up, we have something called perquisites. The easiest way to think about a perquisite is any benefit that you could, in theory, turn into cash. For example, if your company pays your kids' school fees directly, or they pay off your personal credit card bill, that's a perquisite. The full amount they paid is just added right onto your taxable income. Simple. And the second category is benefits in kind, or what everyone calls BIKs. The key difference here is that you get to enjoy the benefit, but there's no way to sell it for cash. The most classic example of this is a company car. You get to drive it, you get the use of it, but you can't exactly sell it and pocket the money. But you're still getting something valuable, and that value has to be taxed. So that begs the question, right? If you can't turn it into cash, how on earth do the tax authorities decide what a company car is worth? Well, it's not just a random guess. There's actually a very specific formula they use. See, the value is set by a prescribed scale, and it's all based on the car's original cost when it was brand new. So the fancier the car, the higher the taxable value. A car that costs, say, 150,000 ringgit new adds 5,000 ringgit to your taxable income for the year. And here's a little pro tip. If that car is more than 5 years old, that taxable value gets cut in half. And what if they throw in a driver? Well, that's considered a totally separate benefit with its own fixed price tag. A personal driver is valued at a flat 600 ringgit a month, which works out to another 7,200 ringgit a year added to your taxable income. And that same idea of fixed values applies to other perks, like if your company provides domestic help or a gardener. But here's the really good news. A lot of the best perks are completely tax exempt. Your medical and dental benefits, your employer's EPF contributions, even your phone and internet bills if the company pays for them, none of that adds a single cent to your taxable income. All right, let's talk about one of the biggest benefits an employer can possibly provide, a place to live. If your company gives you accommodation, this has a very specific value for tax purposes, and it's called the Value of Living Accommodation, or VOLA. So how do they figure out the VOLA? It looks a little complicated, but it's really just a three-step process. First, you figure out the defined value, which is usually just the rent your employer is paying. Second, you calculate 30% of your total cash income, all that stuff from the first section. And third, and this is the most important part, your taxable benefit is the lower of those two numbers. This rule is actually there to protect you from being taxed too heavily on expensive housing. Now, things get even simpler if you're put up in a hotel or a hostel. In that case, the taxable value is just a flat 3% of your cash income. Much, much easier to figure out. Okay,
We have gathered all the pieces of the puzzle. We've got the cash, we've got the perks, and we've got the housing. Now it's time to put it all together and see the complete picture of your gross employment income.
So here it is, the whole formula. You start with your total cash income. To that, you add the value of all your perquisites and your benefits in kind. Then you add the value of your living accommodation. That sum gives you your gross employment income. But we are not quite done yet. There is one last step. From that gross employment income number, you can subtract certain job-related expenses. This is how you can actually lower your final taxable amount. For example, if you're an accountant and you pay annual fees to the Malaysian Institute of Accountants, you can deduct that. Same goes for any travel you do for work. These deductions are super important because they directly reduce the amount of income you'll actually pay tax on. So after going through all of that, what are the most important things to walk away with? Let's just quickly summarize the key takeaways that are going to empower you to really understand what you're earning. First and foremost, please remember that not all cash is created equal. You have to pay attention to those tax-free allowances for things like food or parking or childcare. Every single ringgit you get through one of those is pure, untaxed value that goes straight into your pocket. Second, remember that perks have a price tag. The company car or that domestic helper, they aren't free as far as the taxman is concerned. You've got to know the official, prescribed value of these benefits to understand what they're really costing you in taxes. And finally, and this is the big one, you have to look at the whole picture. Your total compensation is so much more than just that one number on your payslip. It's your salary, plus your allowances, plus your perks, plus all those awesome tax-free benefits. Seeing that full picture is how you know what you're truly worth. So I'm going to leave you with a question. Now that you know what to look for, now that you know how all these different pieces are valued, take another look at your own payslip, at your own benefits package. What's the hidden value in your compensation that you might have been completely overlooking this whole time?